Hey there, moneymakers. Ever wondered how to turn your hard-earned cash into money-making machine? Well, you're in for a treat today because we're diving into the world of equity investment. It's time to unleash the power of your dollar. Welcome to my world, where investing isn't just a game. It's an incredible journey to financial freedom. Buckle up because this one ride you won't want to miss. Please note, I'm not a licensed financial advisor. The information provided in this course is for educational purposes only and should not be considered as a financial advice. It is important to consult with a qualified financial professional before making any investment decision. Past performance is not indicative of the future results. Now, let's debunk a common misconception about equity investment. It's not just for the rich and famous. No, it's for the go-getters, the dreamers, and the visionaries who want to make their money work for them. You probably have asked this question: what is a share? Yeah, I always did. The answers I got were just too big, or I got blue-ticked. Sad, right? If you ever wondered what it means when someone talks about buying shares in a company, today is your lucky day because I'm about to spill the beans and make you pint-sized investment gurus. Welcome to Financial Fun with Peculiar. Picture this. Imagine you're at a family pizza party and there's a huge, delicious pizza on the table. Now everyone wants a slice, right? Well, think of that pizza as a company and each slice as a share. When people buy shares, they are essentially buying a piece of that company's. A share in a company represents ownership of a portion of that company. When you own a share, you essentially have a claim on the company's assets and earnings. Just like you and your friends in the pizza example, people who own shares in a company are called shareholders. And guess what? Being a shareholder comes with some pretty awesome perks. For starters, as a shareholder, you get to attend some exciting shareholder meetings where you can cast votes and have a say in how the company is run. Owning shares also comes with the risks. Sometimes the company may not perform as well as expected, and the values of your shares can go up or down. It's like playing a game of checkers. Sometimes you hop forward and sometimes you have to take a step back. When you buy a share, you are basically contributing to the company's capital, and in return, you get certain rights and potentially a share of the company's profit. Well, probably that doesn't matter to you. The investment 101 and all the theory. You just want to see your money grow, right? I'll use a scenario of 4 guys who all invested an amount of 150 into one organization, but they reaped different amounts. Picture this: waking up on a Monday morning and one share price, or we could say one pizza slice, is equals to 50 rand. Okay? Tshepo has 150 and believes so much in this company, so he gives them his 150. Now, what this means mathematically is, because one share is 150 rands and Tshepo brings 150 to the table, his 150 rands buys him 3 shares to the company. Let's note that. And we have Thandi, who is a bit skeptical of putting in too much into this company. What if the company falls and all her money is gone? And again, what if it succeeds and she loses the profit she could have gained? So she just puts in 50 rand. Now what this means for her mathematically is that because one share is 50 rands, Thandi's bringing 50 rand to the table. Her 50 rand only buys her one share of the company. Let's note that. And let's call it a day for Monday. Waking up on a Tuesday morning and there's a whooping share price growth of 50%. Okay, practically this would happen in like a year's or a few years' time. 50% all at once like that. But for the session purposes, let's go along with the example. Now what this means mathematically is that because one share which was previously 50 rand, 50% of that 50 rand is now 25 rand. And when we add this 25 rand to the previous price of 50 rand, it makes the new share price to be 75 rand. And Thandi, who had invested 50 rands, which bought her one share, mathematically what this means now is, because one share is now 75 rand, one value of a share multiplied by the new price of 75 Rand gives 75 Rand. Tsepo invested 150 Rand, which bought him 3 shares. Mathematically, it now means because now 1 share is equals to 75 Rand, 3 of the shares that Tsepo owns multiplied by the 70 Rand of the new share price means the value of Tsepo's shares is now 225 Rands. Waking up to a new day, Wednesday. And to our knowledge of yesterday, 1 share price was 75 Rand. And this is where our investors stand. Thandi owns 1 share and they are worth 75 Rand. And Tsepo owns 3 shares, which is worth 225 Rands. Are there any new investors at this moment? Well, yes. Thandi, having seen how Mpho has made a lot of money, puts in 100 Rand more to her initial investment, an amount of 100 Rand. What this means mathematically is this: because 1 share is now 75 Rand and Thandi brings 100 Rand to the table, her 100 Rand only buys her 1.33 more shares to the company. And because previously she had 1 share, she now has 2.33. Not that far from the amount that Tsepo owns, but still less. Her newly invested 100 Rand plus 75 Rand of the new share price, making her shares now worth 175. Phumi, having seen the rapid growth, puts all her eggs in one basket, investing 150 in the organization. Now what this means mathematically is, because now 1 share is 75 Rand and Phumi brings 150 to the table, her 150 only buys her 2 shares to the company. Not far from Mpho's 3 shares, not even that far from Thandi's 2.33 shares. The late coming Phumi now owns 2 shares with no growth or loss. No new investors still. Okay, let's go to the next morning. Thursday morning. There's a share price growth of 20%. Let's review the numbers. Because 1 share was previously 75 Rand, 20% of 75 Rand is 15 Rand. And 15 Rand added to the previous price of 75 Rand makes the new share price to be 90 Rands. Thandi, who has invested 150 Rand, that bought her 2.33 shares. Mathematically, because 1 share is now 90 Rand, 2.33 of her shares multiplied by the 90 Rand means that her shares are worth 209 Rand 70 cents. Moving on to Tsepo. Tsepo also invested 150 and it bought him 3 shares. Mathematically, because 1 share is 90 Rand, 3 of his shares are worth 270 Rands. Moving on to our last investor, Phumi, who had invested 150, that bought her 2 shares. Mathematically, because 1 share is now 90 Rand, 2 of her shares worth 180. Our investors seem to have made a lot of profit. All our investors put in an amount of 150, and this is how they have profited thus far. Tsepo has gained 120 Rands with 3 shares in the company. Thandi has gained 50 Rand 70 cents with 2.33 shares in the company. Phumi has gained 30 Rands, only 2 shares in the company. Now to simplify this, Tsepo has 3 pizza slices, Thandi with 2.33 slices, and Phumi with only 2 slices. They both gave into the company 150, but they have different values of slices. That's it for today. Friday, last day of the markets of the week. And we have 3 investors with different share prices. Today we're waking up to a share price growth of 50%. Just another quick reminder, these examples are for learning purposes. In reality, the growth or loss is not as rapid. So mathematically this means that because 1 share was previously 90 Rands, 50% of 90 Rands is 45 Rands. And 45 Rand plus the previous price of 90 Rand makes the new share price to be 135 Rand. The pizza slice once costed 50 Rand is now worth 135 Rands. And who's invested 150 Rand owning 2.33 shares. Now because 1 share is worth the value of 105 Rand, 2.33 of her shares are now worth 314 Rand 55 cents. Moving on to Tsepo, who has also invested 150 Rand, owning 3 shares. And because one share price is 135 Rand, 3 of his shares is now worth 405 Rand. Pimi also invested 150 Rand. That bought her 2 shares. Because now one share is 135 Rand, 2 of her shares are now worth 270 Rand. Our investors decide to meet up later, and they sure have made a lot of profit. Having invested an amount of 150 each, Tshepo has gained 225 Rand and owns 3 shares in the company. And Thandi has gained 164 Rand 55 cents and owns 2.33 shares in the company. Pimi has gained 120 Rand and owns 2 shares in the company. And here comes our very skeptical friends, who's not easily convinced, begging to be part of the rising team. He's gotta make it fast before the market closes for the weekend. We have our 4 investors, and we've already discussed where they stand, all having received gold, and Mpho finally coming into the picture, seeing how much friends are on the rise. Mpho invests 150 Rand in the organization. Let's do the math. Because one share is now worth 135 Rand, and Mpho brings 150 to the table, 150 buys him only 1 share to the company. To be precise, 1.11 shares. Now it's the weekend and the markets are closed. Our investors are happy to see how they have made, except for our friend Mpho. Somebody please tell him that it shall get better, or even worse. Companies can either get a profit or a loss, and our examples have really been positive. Probably you're even convinced to start investing, but the purpose here is to give lessons based on reality of the game. And this is what always happens thanks to social media. When a company has done so good, that's now at this point when everyone encourages other to invest into their equity. Get back to the game. This is Monday, and it's a blue Monday. A share drop of 15%. Mathematically, this means that because one share was previously 135 Rand, 15% of the 135 Rand is 25 Rands. This amount subtracted from the previous price of 135 Rand makes the new share price to be 114 Rand 75 cents. So what does this mean for investors? He owns 2.33 shares because one share is worth 114 Rand 75 cents. 2.33 of her shares are now worth 267 Rand 37 cents. And Tshepo owns 3 shares. And because one share is now 114 Rand 75 cents, 3 of Tshepo's shares are now worth 344 Rand 25 cents. Me owns 2 shares, and because one share is now 114 Rand 75 cents, 2 of her shares are worth 229 Rand 50 cents. Our late karma, Mpho, who owns 1.11 shares. One share is now 114 Rand 75 cents, and 1.11 of his shares is now worth 127 cents. 127 Rand 37 cents. That's a lot. I mean, he bought one piece of slice which was worth 150 Rand, and now if he wanted to sell it, he would have to sell it at 127 cents. 127 Rand. No profit. What do we conclude then? Given our 4 investors, Tshepo is what we call a high-risk investor. He invested all his money in a company which had a share price so low, trusting the potential of its growth. He owns 3 shares, making him the greatest shareholder with more returns. Then we have Thandi. Thandi is what we call a medium-risk investor. She initially invested 50 Rand into a company with a share price so low, leaning somewhere in between growth, loss thoughts towards the company. Upon seeing growth, she put in more money into the initial amount, and she owns 3 shares and comes in second into the ranking with regards to profits. We now move on to Pimi, a low-risk investor. She had to see some form of growth in order to make the investment. She has no risk in herself. She owns 2 shares and comes third in the ranking with regards to profit. And lastly, we have Mpho. Mpho is the latecomer investor. This is the sort of social media influenced investors. This kind invests when they see trends. He owns 1.11 shares and comes in last of the rankings. He's not even profited. There's still a chance of profit given a bit more time. You can also use graphs to assess the growth of the company. Now suppose you invest in May 2014 and you only cashing out now. Look at the major growth you would have made from the initial investment. At this point here, there was a dip. But because it is not below your investment point, it would have not affected you. Suppose you had invested here, January 2019. At this point, you would have lost a lot of money. But suppose you still kept your money to this point, you'd have made some growth here. Do keep in mind that there are many factors that can influence growth and the loss of the company, but that is out of the scope of this video. Kind reminder, I'm not a licensed financial advisor. This information provided in this course is for educational purposes only and should not be considered as financial advice. It is important to consult with a qualified financial professional before making any investment decision. Past performance is not indicative of future results. Don't forget to like, share, and subscribe.